Don't rent in the greater Philadelphia area. There's a recent Redfin study that came out, and these numbers are going to shock you, that 59% of the homes in Philadelphia that are for sale, and this is as of June 2023, are cheaper to buy than rent the same property. 59%. And if you look at the monthly payment on buying the average priced home in Philadelphia versus renting it, the monthly payment is 7% less expensive when you buy. The numbers don't lie. It costs money to rent. It's not necessarily the best financial decision, and this is all documented data. There were a couple other cities around the country that shared similar stats, not many. Philadelphia is one of 4 cities where this is the case. The others are Detroit, Cleveland, and Houston, and if I'm picking one of the 4, I'm right here in the city of brotherly love, no question about it. So there's a unique financial opportunity here for people that want to purchase a property, but there's other reasons than just the costs. And that's what I want to go over here today, because it's not just about what's my monthly payment, the 7% differential, or the type of home. There's some other tangible benefits to buying versus renting that I'm going to go over with you. And even if rates went to 5%, other parts of the country would still be more expensive to buy than to rent, but not the city of Philadelphia. So we know what the numbers look like. We know about the affordability. There's also lost equity. That's reason number 1, besides the numbers. So I guess reason number 2, that you don't want to rent instead of buying. You're losing out on equity, because what we've seen over the past 3-4 years, we saw a 10% increase in home prices from 2019 to 2020. We saw another 10% plus increase from 2020 to 2021. And this year we're seeing a 3 to 5% increase in home sales from 22 to 23, just in the value. So think about all the lost equity if you're renting a home during that time. We're just talking about a 3-4 year period. If the average sale price is, let's call it $450,000, which is right around where it is in the greater Philadelphia area, well, 10% is $45,000. So that's some significant money you're losing out on if you're renting instead of buying a home. So you lose out on that appreciation, and that's going to decrease your net worth. A lot of times people want to buy a home. One of the reasons is to have a tangible asset that's going to go up in value, and this really demonstrates that. Number 2, or number 3, I got to get these numbers right. A lot of people say, well, I rent because I don't want to pay property taxes, or I don't want to pay homeowners insurance. I've got some bad news for you. You are paying property taxes, you are paying homeowners insurance, you're actually paying a mortgage as well. It's just not your mortgage, your property taxes, or your insurance policy. And most renters will still get a renter's insurance policy. It only covers your personal property, so you're still paying insurance in a lot of cases, and this all factors into the monthly rental rate. So when people say they don't want to pay a mortgage or they don't want to pay these things, you're paying them. You're just paying someone else's. And that's why landlords tend to have a significantly higher net worth than people that rent and people that don't own property. So reason number 4, you've got a tangible asset. This is not like the stock market, right? If you look at some of the companies that are out there, I'm not going to go and name them, but they do really well in the stock market, and then all of a sudden they make a bad decision or something goes wrong and you own that stock and the stock price tanks. What ends up happening is you lost all your money. You have nothing to show for it. The company is now worthless. When you own a piece of real estate, you own land, you own walls, you own airspace if it's a condo, you own something tangible, and a lot of that's based on the location. And where it gets really exciting is when you find a place where you see the community investing in the local neighborhood, because those commercial investments, like, for example, if you see a Whole Foods come to a neighborhood, I'd buy a home next to the Whole Foods, because you know that's going to bring a lot of commerce, a lot of customer and consumer spending into the local market. So when that happens and you see that investment, the prices go up, the value of your asset goes up, and you still own the land, the home, the airspace, the building, however you're taking title. So you have a tangible asset versus a stock that can go up and down, and you don't have anything to show for it at the end of the day. The next reason is rate volatility, right? Everyone's saying right now, and you might be one of these people, hey, rates are too high for me to buy a home. Well, that's fine. rental prices have also gone up substantially. It's actually a big part of the inflation conversation that is happening right now with the Fed and how they're trying to bring inflation down to a 2% level. So what we've seen is that rent prices have come up substantially, even as rates have gone up, because they will go down. What goes up must come down. You don't get to take advantage of that as a renter. When you're renting a property, the rate typically just keeps going up and up and up. I rarely have seen rental prices go down, even when the economy's in a little bit of a different situation. So the cost of living goes up, rental rates typically don't come down, but when rates do go down, you can take advantage of a refinance and play that long-term fixed payment game. You don't have that same fixed payment luxury with a rental. Remember, most loans are 30-year fixed rates, so the payment is fixed for 30 years, so you've got stability, and when rates are advantageous to bring your payment down permanently, you have the ability to take advantage of that. As a renter, you don't have that ability. And the last reason is certainty. I want you to think about certainty for a second, because if you've been in a rental and you move into a home, you know what it's like. They start bringing people through to look at the property and go rent it. Sometimes landlords decide, hey, I want to cash out and sell my property, and they have every right to do that. Well, now you're out of a home. You don't have certainty around where you're living. In some cases, maybe they're tearing the building down. Maybe they're building something else. Maybe they're converting it to condos. There's all these different things that can happen. When you own a home, you control whether or not that gets sold, unless there's a weird eminent domain situation, which is very, very rare. When you own a home, you have control and certainty over your monthly payment because of the fixed rates like we just talked about. You know how long you're going to be there. You have control over what work gets done, what work doesn't get done. When you're in a rental, you're at the mercy of the landlord. And there's some great landlords out there, don't get me wrong. There's also some not so great landlords that are out there. So when you have certainty around, okay, I know what I'm going to do to my property, nobody's selling it, I'm going to be here as long as I want to be, and I've got a fixed payment for the next 15, 30 years, whatever your plan is, that's some clarity around your life. You know exactly how long it's going to take you to get places. You can budget in projects and improvements you want to make to the property that are going to increase its value. As a renter, you have none of that certainty in your life. So these are the reasons why you don't want to rent in the city of Philadelphia. Now, sometimes it does make sense to rent. If you're only going to be here for a year or two, you may not want to buy a property. If you're moving to the area and are unsure about where you want to live, maybe you want to rent for a year to get to know the area. Totally get that. Those are valid reasons to rent a home, but there's a lot more valid reasons that you want to buy and invest in yourself and help build your household and your family's net worth.